Hey everyone, welcome back to my channel. It's Nazak Wulashia back with another video. Today we're going to be talking about the stock that IPO today, that opened on the market today. Drum roll. Just kidding, no drum roll this time. Robinhood. We all know it. So before we begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. Let's get into it. All right. So this is going to be very similar to the video I last posted. I can't remember what it was, surprisingly, but this is going to be very similar. So let's first go to Hood stock. Let's first look straight up at this. Nasdaq HOOD currently trading at exactly $36. It's down 5.26%. Oh, $36.20 because the market's still open. And it started trading at $38, open at $38, and it just slid down. And I don't even know why it slid down. Well, we'll look at that later on this video, but they don't have a market cap yet or a P ratio yet since they just started trading. Their market cap, however, hang on, their market cap is about $30 billion because I had to pull it out from another website. They don't have that much of data. But let's look at their quarterly financials for the first quarter of 2021. The revenue was up by 309.39% year over year, which is amazing. In March, March 2020, they didn't have an increase, but this, you can see it obviously jumped like crazy. And their net income is minus $1.44 billion in the first quarter, which was bad. That's a 2,651.9% decrease. Their diluted EPS for the first quarter was minus 6.26 per share, and that is pretty bad. That's a 2,621.74% decrease. The net profit margin was also down, and comparing to that, it's more down than last year. It's 572.23% decrease. Their operating income went up, which is bad because operating income, I wanted to show you. I don't know, never mind, not this one. Operating income is okay. So net change in cash is 101.66 billion, which has gone down. That's also bad because that shows that if you see what is net change in cash, the net change in cash is the amount by which a company's cash balance increased or decreases in an accounting period. You can use information from 3 sections of a company's cash flow statement to calculate its negative. What does a negative net change in cash mean? It does not mean that a company is unable to pay all of its obligations. It just means that the amount of cash received for that period was insufficient to cover its obligations for the same time period. So they aren't getting enough money for some quarters, which could be potentially bad. Their cash on hand is like cash durable they have ready. It's 4.79 billion. They don't have an up or down increase year over year. The cost of revenue went up, which is bad. It's really bad because you don't want that to go up. Cost of revenue basically is the total cost of manufacturing and delivering a product or service and is found in a company's income statement, which is pretty bad. You don't want that to go up. You want that to stay down. And let's go back here. So we're done. Cost of revenue went up by 154.8%. Operating income is going to double tick. I'm not even sure if I remember operating income definition. I'm going to pull this up for you guys. I misspelled definition. It's taking a company's gross income, which is equivalent to the total revenue minus COGs and minus all the stuff. Earnings before interest and taxes is a measure of firm's profit that includes all incomes and taxes except interest expenses and income tax expenses. That went up, and that is good. But the cost of revenue went up, which is bad. We don't know yet how much debt they have. They haven't it hasn't shown on Google Docs yet, sorry, the Google Finance yet, but I would be interested to see that. So continuing on to the NASDAQ.com article, Robinhood stock trading app is set to start trading. Well, it already has started trading as a public company today. The company emerged as a go-to destination for retail investors earlier this year's meme stock trading frenzy. Now it seems like Robinhood is trying to capitalize on retail investors' keen interest in the likes of GameStop and AMC Entertainment. Recall that these stocks have seen wild swings and plenty of discussion taking place over on Wall Street Bets. Remember that Reddit thread? Yeah. Okay, anyway, so the brokerage lost $1.4 billion in the first quarter of 2021, which is what we saw back there, tied to emergency fundraising related losses during January's GameStop trading mania. The company generated $522 million in revenue in the first quarter of 2021, up 309% from the $128 million earned in the first quarter of 2020, which I showed that. So, but the upside about this, that was the downside about it, that they're still recovering from all of that, and their investors have been hating on Robinhood because they think it's going to be a meme stock now, because less people have started to like Robinhood because of the trading restrictions, and they're like at least 50 lawsuits over the trading restrictions. But the upside on Robinhood is that they have rapid growth. They've been founded in 2013. The app experienced record levels of new younger traders entering the stock market during the pandemic. The surge just continued into 2021, marked by meme stocks, and they found itself in the middle of a firestorm in January among the short squeeze in GameStop. But Robinhood, which offers equity, cryptocurrency options trading, as well as cash management accounts, had 18 million clients as of March 2021, up from 7.2 million in 2020, an increase of 151%. The company estimates funded accounts reached 22.5 million in the second quarter. The company estimates its 18 million retail clients, more than $80 billion in customer assets. In the first quarter ballooned to 22.5 million users, and more than 100 billion in the second quarter of 2021. So they're doing remarkably well in the other quarters. They've been still recovering from the last quarter though. So the second quarter, they said revenue, right? Let's go back to the article. Where were we? $100 billion revenue. No, never mind. It says is it customer? Are they referring to customer assets? I'm not even sure, but revenue, if we go here, revenue. Okay, that's quite a significant increase then. So let's go back. Assets under custody have ballooned to roughly 80 billion. We already went over that. It's the third largest brokerage based on number of funded accounts, behind Fidelity and Charles Schwab, which purchased TD Ameritrade last year. So that's good to hear. They're recovering. They're becoming stronger. But still, I feel that it may be a meme stock. Still, somehow I feel that way. Because maybe it's like a very interesting mix, because people are very, very weird and jumpy on this stock. Like it's falling. And why is it falling? That's what just doesn't make sense then. So next. So Robinhood, next. So shares of Robinhood fell about 5% during its NASDAQ debut after pricing near the low end of its IPO range. The online broker started trading at $38 per share, the low end of its range, valuing the company at roughly $32 billion. After dropping as much as 10% near 35, Robinhood's market capitalization was about 29 billion. Ouch. So people aren't really liking the stock. And I feel like it's mostly due to the short squeeze and the restrictions. So trading for the first time under ticker Hood, the online brokerage hit the public market that sets to democratize for amateur investors. Robinhood, whose stock trading app has surged in popularity, is valued at 10.5 times forward EBITDA. The company sold 52.4 million shares, raising close to 2 billion. Co-founders Vlad Tenev and Baiju Bhatt each sold about 50 million worth of stock. The company was last valued in the private markets at 11.7 billion in September. Goldman Sachs and JP Morgan Chase are the investment banks that led the deal. Underwriters will have an option to buy an additional 5.5 million. Ooh, lucky or not so lucky? So Robinhood was profitable last year, unlike many recent IPOs, generating a net income of 7.45 million on net revenue of 959 million in 2020 versus a loss of 107 million on 278 million in 2019. And that's the end of today's video. I think that's all for today. So in conclusion, this is a very interesting stock. Mostly, I think it's positive, but the risk is the underlying hate from the restrictions that are ongoing in their cases, like their court cases over people losing GameStop money, because when they wanted to sell, they couldn't sell and they lost just so much. But overall, their financials are looking good. I think this is going to be a very profitable company. But this is just my opinion, so don't listen to me and do your own due diligence. So thank you guys for watching this video. I hope you enjoyed this video and found this information helpful. Please be sure to like, comment, and subscribe. If you have made it till the end of this video, please comment powder puff below. Thank you for being such wonderful, beautiful people if you made it till the end. And if you're just bored, why? Like why? Anyway, love you guys. See you in the next video. Bye. Oh, wait. I just wanted to tell you that about in the next like 2-3 days I might not be able to film because I'm going overseas. I'm going out of town. So don't be discouraged if I don't pop up, okay? Bye.